Guys and girls, there's a major ultra bullish signal approaching very fast. Hey, I am Luke Downey going over our latest MAPsignals insights. It is a doozy and it's got a lot of great hard-hitting evidence of why a big rally is coming later this year. So let's not recap what's going on with the Fed. You guys can look at other YouTube channels, figure what all that arguing is about. Let's just look at money flows. That is what MAPsignals does better than anyone else. And here has been the narrative that we've had for many months. It's that the big money index, right? This is giving us a real-time view of money flows, has been in this steady decline really since the end of the year. It's gone from a red hot 91% reading all the way to just below 50% recently. And if you're new to this channel, all this is telling you is that the number of stocks under the surface of the market, they continue to get sold compared to those getting bought. So this is telling you there's an unhealthy picture under the market. And the last time we saw this again was back in September and October of last year. You guys remember that was near the lows before a breathtaking, crowd-stunning rally began. But here's the deal. Let's go ahead and see what this data might mean looking backwards. So we asked this one question: how often does the BMI fall 40 points or more in a 4-month time frame? Because we know that this is rare. Turns out it's happened a few hundred times, so it's not that rare. However, what can we look back recently that is very similar to this pullback? And it actually was in the mid to late 2020. So if you guys remember, we were getting bullish at the middle of March of 2020. This was probably the most non-consensus call that we had. Our subscribers could not believe that we were getting bullish, but the BMI was leading us out of the depths there. But as it relates to now, we had a red hot BMI of about 90. It fell about 40 points over the next 4 months, very similar to now. And then we saw something really spectacular. The BMI actually started to head up and lead us out into new highs for the market. So we went back, we looked at all of our back-tested data going back 30 years and asked the question, how often do we fall 40 plus points over 4 months? Turns out about 303 instances, and it's really about 17 times that this actually happens. And here's the major piece, and here's what you need to literally print out, put it on your desk as a reminder that these are not bearish times. So whenever the BMI drops 40 plus points, 1 month later, the S&P on average, this is all instances, is up 2.2%. 3 months later, 5%. 6 months later, market beating 9.5%. And a year later, up 14.8%. Now, if we just look at times that are very similar to today, again, talking about that late 2020 that we saw, here's the deal. 1 month later, the S&P does in fact struggle, 4.1% lower. 3 months later, it's still down 1.2%. But why do we keep telling people to buy the dip? Why do I say that all the time? Because the evidence tells us that we're probably going to be looking at a big rally. Of these similar instances, 6 months later, the S&P is north 14% on average and 20% a year later. We should stop the video now because this is very, very bullish. It's telling you all you need to know, but I'm going to take it a step further. You guys know we're all about high quality growth stocks. Let's do the same time frame over the Nasdaq. Wow. Get your bear suits off. This is the Nasdaq 100 whenever the BMI drops 40 plus points. Let's start first with all of these 303 instances. the Nasdaq is up 4.1% a month later, nearly 10% 3 months later, 17.4% 6 months later, and 12 months later up 26.2%. Again, if we just single out the periods that look very similar to today, we're talking about 1998, a brief period in 2019, and then in the late 2020 era. 1 month later, the Nasdaq, it does fall down 2.5%. 3 months later, it's effectively flat. But here's why we tell you to buy the dip. On average, 6 months later, in periods like this, it's up 31.6%. 12 months later, it's up nearly 50%. Holy moly, this is all you need to know. Don't listen to the headlines. We tell you this. Focus on the money flows. That is what is going to drive market prices. If you guys aren't focused on amazing companies that are going to be breaking out to new highs later this year, you guys are missing. Don't worry about interest rates. Follow the big money. That is how you win with investing. I will see you guys next time.